Let's talk about Apple, though. Seen red today after Warren Buffett announced Berkshire Hathaway cutting its stake in the company by about 13%. Joining us now, Payne Capital Management President Ryan Payne. Is this bearish for Apple or just sort of a tax reason and they cut their stake, but they're still a large holder?
It's such a huge holding for them. It's like 50% of their equity portfolio. And to put it in perspective, it's like $135 billion. You add that, plus they have about $190 billion in cash. That's like, if you look at the capitalization, that's literally almost 40% of the entire company at this point. You're basically making a bet on Apple in cash. But you know, they bought that stock in 2016 when it traded at like 25. Now it's up to 180. I think it's just like time to take your profits, time to reduce the position from a risk management perspective, is my view of that.
Makes sense.
Yeah.
You can see the stock is trading down there. Let's talk about the consumer for a second, because what Taylor was pointing out, that we saw in the Starbucks earnings and on their conference call, it's signs that the consumer is finally cracking, pulling back on things that are not deemed necessary for the household because things are getting tight and more people are losing jobs. Do you think that this is going to have a ripple effect on the market that's really held up and been quite strong?
Well, I think the thing we've learned here is the death of the consumer is always greatly exaggerated. It's like the sun rises in the east. Americans love to spend money. I think Starbucks is really about Starbucks, right? You have their labor costs have gone up a lot, which because we have wage inflation, tight labor market,
right.
And China is their second biggest market, and China is in a huge slowdown. So I think it's more indicative of what's going on with Starbucks than the overall economy. Let's face it. I mean, as Mick Jagger once said, you can't always get what you want.
If you try sometimes, you get what you need.
Right. So we thought we were going to get 7 or 8 cuts at the beginning of the year. We're not going to get that. No. But what we saw on Friday was we saw still a healthy labor market, but growing a lot slower. That's kind of like as good as it gets. And I think he went to London School of Economics, but I digress.
What?
So always listen to Mick Jagger when it comes to economic advice. So I don't think the bottom line is the consumer is going to slow down. I think it has been exaggerated. And you have baby boomers retiring in droves. They have over $70 trillion in assets. They're going to spend them down during retirement, whether it's on health care, trips, and hopefully some inheritance, mom and dad. So you're going to see a lot of that.
Who says that?
What's that?
I hope they're not watching.
I hope they are.
You have no idea what you're speaking. Jackie's love language in the Rolling Stones, by the way. You have no idea.
That was much respect.
But I got to ask you this. Okay, I want to talk about the consumer because I love what Walmart's doing right now. I think they are making smart decisions. You like them too as an AI play. Why?
Because I think every company is an AI play, right? We know the enablers. NVIDIA's up 90% this year. Palantir, you just up over 100% over 12 months. Supermicrocomputer up 190% this year. It's no secret that these AI companies are going to power AI, and the market's priced that in. But we're not pricing in is everyday companies like Walmart that now all of a sudden their search box is using AI. You know, they just partnered with Microsoft. You know, they're going to be automating more of their supply chains in the next couple of years, which is going to be like $20 billion to the bottom line. So every company's margins are going to benefit from that. And every company that's not AI is trading so much cheaper right now. And this is what happened during the dot-com bubble. As all the enablers got bidded up really early, and then the next decade they did nothing. Well, as every other company embraced the internet, their margins went up, productivity went up. So you've got to invest outside of AI, outside of big tech. I've been like pounding the table about that. That's where the opportunity is.
Fascinating.
Well said, and great note to leave it on. Ryan, thanks so much.
Thank you.
Appreciate it.
Great to be here.